Not everybody has the ability to sit and day trade. And really, for most people, even if you have the time, it's probably not even the best use of your time. Day trading, it's tough, right? Even when you have a solid system, like at NetPicks, we use the high velocity wave trader. But for me personally, I have the time, but my personality does not allow me to day trade. And I'm sure there are a lot of you out there that are in the same boat, but that does not mean that you can't profit from the markets. And I'm going to give you an approach that's going to allow you to do that. Before I continue, if you just hit like and subscribe to our channel, hit that little bell so you can be notified when these videos are being put up, that would help us out. So what you're going to learn in this video is how to determine areas of interest on a higher time frame chart. And once you determine those areas, you're going to use a lower time frame chart to find a setup. And also, if you use alerts and stop orders, that's going to help you do this as well. So the first part of our strategy is a weekly line chart. Now, line charts just plot the closing prices of the previous week. Okay, they're really useful to filter out the noise that you'll get with a bar chart or a candlestick chart. And while you can use the extreme pivots on these charts, if you go inside the extremes, it's pretty valuable. Because oftentimes, when price returns to these zones, price will reverse prior to the extreme high or low. And a good way to think about that is how the head and shoulder works. Now, some people would call the head and shoulders a strong reversal pattern. And you can see that price reverses at an area around the same zone as the left shoulder. So a trader that's always waiting for the extremes to get tested is going to be missing out on some of the best trades that have huge potential for profits. It's a fact. Now we're going to use a daily chart. So once we've removed the noise by using a line chart on our weekly as a general view of potential trading areas, our daily chart is going to use regular bar or candlesticks along with a 20-period exponential moving average. Now the EMA, the 20 EMA, it's going to be used for just general slope direction, although price action is going to be a lot more important since a moving average is a lagging indicator. One important feature of the moving average is the ability to show you objectively when a market is not in a good condition for trading. Now, nobody can look at this chart and dispute that price, where that average is labeled, is in a trending condition. You could trade that. But in the middle of the chart, with price just whipping around the average, it's obvious that price is not conducive to good trading. So the weekly line chart, it could show you the zone, but the daily chart and using the EMA, it's going to tell you whether you should just skip the instrument because it's not trending, it's just chop. So we want to look for trades. And the first thing you want to do is you have to narrow down your focus list of instruments. And you can use any of the screeners out there, FinViz or TradingView, are just two that come to mind. You want to find instruments that are trending. And a quick method is just to scan on the weekly charts with, and here's an example, the following settings. Now you can adjust any of these settings, okay? They're just for an example. So you look for volume, at least 500,000 over the last 60 days, right? Because we want to make sure that whatever we're looking at, in this example, it's stocks, have interest. We want to see the SMA 20 greater than the SMA 50, just making sure that the short-term trend is up. Now you can take that one out if you want, right? We don't need to use the 20 if you want to look at charts that have a deeper pullback. We want to see that the SMA 200 is less than the SMA 20, so it's underneath it. That's just another confirmation of an uptrend. We want to see the last price that's plotted greater than $5, right? We're not looking for penny stocks. You can go down to $3 on this as well. We also want to see that the longer term uptrend is intact. So we want to see the SMA 50 is greater than the SMA 200. So from that scan on the weekly charts, I actually got over 560 matches. So now I could sort them using 1 month percent changes to get the ones that have made bigger moves, right? So it shows the stocks that are more active. So I'll also note that you can trade against the trend when you're considering swing trading. Now it is an advanced technique. Understanding price movement and looking for one swing to profit from, though, it's very viable. So we want to examine the chart. So the first chart to look at is the weekly line chart. You're looking for a chart that has the line pivots, the turning points, that show that the weekly closes have space between them, right? So that means you're looking for weeks that have been trending up or down from the past weeks. Now, if you see a lot of the pivots are close together, you already know that the chart is pretty choppy. This particular line chart looks pretty good, and you can see that there's been some trending action. And as I've mentioned before, I've drawn some lines inside the extreme highs of this chart, and you're also free to use the extreme points. Okay, you can use those as well. But obviously, we're going to use prior examples to outline the strategy, or I'd have to wait for weeks using the current action. So after we did our line chart, we would bring up our daily chart and we'd see how price is shaping up near those zones. And I can't stress this enough. You have to have the ability to read charts, okay? Because there are certain things to look for if you're trading breakouts or pullbacks to increase the probability of success. You can just search through our channel here and you'll find quite a few videos on pullbacks and breakouts. So also, if you did come across this particular line chart today, you would not really need to examine the daily if you're trading with a trend, because current price is far from any potential weekly support below. So what's the setup? So we're going to use that first pivot from the left of the chart. This daily chart shows a breakout and a pullback scenario. So when price breaks out, it doesn't stray too far from the breakout point, and that is a sign that a breakout could fail back inside the range. And it does a little bit here. But slight violations of the breakout point does not always invalidate the potential trade. Now this chart looks to be clearing out just the week longs with that gap down. And then the failure of further downside after a gap, it points to a probability of a move up. Now there are a few different entry techniques that you can use. You could trade the green candle at the bottom of the pullback. You could enter on the break of the 20 EMA since the weekly chart is already supporting the upside move. You can look for 2 lows or 3 or 4, it doesn't really matter, completely above the 20 EMA. Yes, I said lows, and use a buy stop above the second candlestick or the third or the fourth for an entry. You can look for an inside bar and use that. You can look for trend line breaks. So having a toolbox of different ways to enter a trade is very, very helpful depending on the price action that you're facing. But one thing to watch for with the weekly chart is when there are quite a few pivots in the same zone. Remember that line charts only show the closing prices. So when you have a lot of those in the same zone over time, right, the zone becomes weaker, not stronger. So just think of multiple hits on a support zone. That doesn't make it stronger. It makes it weaker and eventually breaks for all the stops that are underneath that. Looking back at a weekly chart here, the red lines, they define an area where price has closed multiple times. That black line, that represents virtually an untouched zone, or it was actually a resistance zone that was broken. Right? So I want you to look now at the far right swing low. And now I want you to look back at the daily chart here. So this is a really good example on how that moving average can also be used to show extended price. Price is now pulled into an area of interest on the weekly chart. It's extended from the moving average. So now you want to think mean reversion potential. And then we get a trend line break to the upside. When we combine all of that, we now have the probabilities in our favor of a move to the upside. Now I mentioned earlier that you don't have to just trade in the direction of the trend, right? Many times you can trade a swing against the main direction of price for a pretty good gain, especially when you're using the weekly or the monthly support or resistance zones. Okay, we're going to see that in this example. This is Bitcoin. We see price decline with that first arrow. We have a rally and puts in another move lower at the third arrow. And here's the chart. So on the left is that first visit back to the pivot zone. A trader could buy stop the high of that green candlestick, or the swing high that came before that. In the middle of the chart is another visit to the zone. We have a large outside candlestick that closes bullish. So a trader that was concerned about that candlestick could just look for a break of the range for an entry long. Now that black circle on the weekly chart, that's where we actually see a resumption of the downtrend as a lower low is being put in. On the daily chart, the current area of potential resistance is this right here, 36,287.55. So traders that are using this method will be looking for a rally into this zone, right? Not the exact price point, into the zone. Profit target stops. There are so many ways that you can take your profits. And really, the easiest one is just to use a multiple of your risk. But anyways, name a few ideas. So if you're risking $5 as an example, just look for a gain of $5 plus commission or fees. Take a 1 hour target, right? The trade worked. Take your money. You can use trailing stops under or over the previous candle lower high. You can use the chandelier stop loss, which is a trailing stop. You can use previous areas that can act as support or resistance. Placing a protective stop, that has just as many as approaches as you can think of. You can use the swing low or the swing high that occurred before your entry. You can use a multiple of the average true range. It's a very viable approach, 2 times the ATR. Or just tuck your stop over or under any area of price consolidation. Now, simple approaches, they work, okay? So I urge you to avoid complicating the process. Just make sure that you're not taking little small profits and huge losses, okay? You're gonna have a really short trading career doing that. So this is just a high level overview of the strategy. We're playing support and resistance levels from higher time frames. We're going to use a daily chart to find our entries. Now the moving average, we can use that to define a whipsaw in price. We can use it to define extreme moves in price. And if you're a conservative trader, you would use it for trend direction on the daily chart, right? It's very simple to scan a line chart using weekly data. You can do it on the weekends to determine if an instrument is worth a deeper dive. Like here, this chart has quite a few pivots and a handful of long lines where the long lines indicate trending action. If you're facing these kind of charts on the weekly, look to the edges or the extremes. Ignore the choppy stuff in the middle. But that said, remember this is only closing prices. That daily chart may just be a mess of long upper shadows and lower shadows. They're not going to register on this chart. Like those are the charts you just want to step aside from. You have to make sure you define your entry technique, define your stop loss, define your take profit, stay consistent. Again, hit subscribe. Like this video if you learned anything. Any questions or comments, you can pop them below, and we'll catch you in the next video.